What's going on, guys? Welcome back to another video. Before we get into it, make sure you check the link in the description for my free Discord link where we post our daily market analysis on the pairs that we're looking at. We post our entry levels and much more, and I also drop all of the trades that I'm taking, which when they hit take profit is a 1 to 5R, which is absolutely brilliant. Keeps your win rate nice and high and your profit also much more reasonable than, just putting 1 to 2s or 1 to 3s or 1 to 1s respectively. So now we've got out of the way, let's get into the video. So I wanted to break down this price action here. I think it's a lovely bit of price action that we can all learn a little bit from. So how to trade the New York Open Kill Zone. This is NZD USD. I've actually vigorously tested this pair. And actually, out of all the three pairs I trade, which is GU, NU, and EU, NU provides actually the least amount of trades, but they seem to be a lot higher quality, and the strike rate seems to be much, much higher than EU. EU is my worst performing pair, but it still does yield nice RR, so I am still profitable trading EU. And GU this year has been moderate, I will say, moderate. GU 2022, I absolutely killed it. New York strike rate 80%, London strike rate 68%, overall strike rate 73%. But this year, GU has been a little bit less well performing, I will say. But my overall R gain for each month has still been rather respective. Now, like I said, NU is my better performing pair in terms of strike rate over the past 8 months of this year. So if we just start to break down this price action, we can clearly see that we are in a downtrend, putting in lower highs and lower lows. Then we start to formulate this little range. Then we sweep sell side liquidity here, sell side liquidity here, and give a nice break to the upside, which comes from a run on liquidity during New York Kill Zone after running out a previous session low. So this gives us nice high probability prognostication that we could be seeing price turn round for a potential buy setup. So what do we want to see? We want to see all of these things not necessarily happen during a kill zone, but our entry needs to come during a kill zone just so that we've got volume behind us. So we know that, the banks are trading and the most transactions are happening in the foreign exchange market when we are getting involved in the market. We want to be piggybacking on the back of volumetric moves, I will say. So as you can see here, we take out a London session low. So that's previous session low. As you can see here, this would be our London kill zone. Let's mark that on as London kill zone there. New York kill zone, we run the previous session low and we displace very aggressively to the upside, giving us a break in structure on the 15-minute time frame. So now basically what we're looking for is a return down into discount pricing, and not just discount. I personally like to use the lower 30% of the range because I find that this gives the most explosive moves, as you can see here. Whereas if you just use the EQ, you might say, okay, we've got a bullish order block here, which is in discount, and you might try to take a buy off here, and ultimately you end up getting stopped out before the true move happens and then runs. And if your psychology isn't in check, you might not end up taking that true move and you miss the move. So this is predominantly why I trade out of only the lower 30% of the ranges. It does mean I take less trades, yes, but the trades that I do take tend to be more high probability and tend to run for more pips. Now, like I said, entry should come during the kill zone. So this is not a kill zone. This is 3:45 p.m. New York local time. So, we're coming up to New York close and heading into spread hours. sort of around about this time. So I personally wouldn't be looking to take a trade here. However, we can follow these ranges on. As you can see, what do we do here? We take out sell side liquidity again, and we give another market structure break here on the 15-minute time frame. So now what do we have? We have a downtrend. We have a run on liquidity during a kill zone, running out a previous high volume session low, and we have a break in structure, a return down into discount, and an impulse / displacement out. This gives us a higher low to trade from. So now we have a confirmed bullish trend because we have a higher low. I hope that makes sense and that you're following along. So now we just follow the same process. My trading plan is absolutely mechanical. I don't really need to think about anything anymore. And we want to denote our order blocks in this lower 30% of the range. And we have these two down candles before the expansive move out of the lower 30% of the previous range. So I'll denote this as my POI. Now notice how this is 645 and this next candle is 7. Now due to this hitting the order block out of a kill zone, I personally would not take this first tap in, and as you can see, it only mitigates literally the open, sorry, not the open, the high of the order block. So I would, 9 times out of 10 reasonably assume that we might come down during the kill zone to then come out, which in this case we don't. However, the other entry that we do have on this, which is the entry that I personally took, if I can just get rid of this arrow, once we take out this open of the last bearish candle into the order block, this gives us a change in state of delivery on the 15-minute time frame. So I'll denote that here, and then we can look for entries with the assumption that this new low will hold because we've taken out that last bearish candle. So what I would then do is denote my new level that I'm looking to get long from. What am I doing? I need this, which would be basically this low to this opening price of this bearish candle. And I would simply take my entry when price returns back here, covering that low. Here it gives a nice 5 pip stop loss. If you want to be a bit more generous, you could cover the bodies of these candles of the actual order block. But in this instance, I would deem it not necessary to, so I would just give it a little bit of buffer. We'll give this one a 5 pip stop. And you can target this high for, this is 5.8R. I would personally just close it off at around about 5R. Just gives me nice consistent profits out of the market weekly, and I'm not ever swinging for massive targets. If I find this helps with my psychology, because I know that I'm always paying myself. On the odd occasion, I will hold a trade for, the big targets, but I have to have a lot more confluences in line in terms of the higher timeframes. But just this strategy that I trade the majority of the time, I'm just taking my profits at 5R, as you can see, like this. And this was a super, super quick trade. You would have hit take profit in literally about an hour, I think. 45 minutes, you hit take profit, you bank 5%, and you're done for the day. This is the end of the New York session, so you just come back tomorrow. So that's it. I hope you enjoyed the video. It's super, super simple, and I will see you guys in the next one.